Welcome to the unit where I introduce you to trading basics. Now, I have to tell you that I absolutely do not trade with all or even most of these basics. And so you might ask, well, why teach it then? And it's because they are basics. They are common ways of charting or are a typical piece of a trading strategy in many traders' playbook. You're going to see these referred to over and over again, and I at least want you to have been exposed and to know the general purpose of what someone might be talking about when they refer to these things. But also, you might just find one or some of these that you absolutely love, and you can take what I teach in how to build a powerful trading algorithm and really form it into your trading plan for being a consistently profitable trader. So with all of that said, I will not be teaching a deep dive into any of these concepts. This is just an introduction and giving you enough information that you can go into the markets and identify and trade with these pieces should you so choose. There are hundreds of ways to use each of these concepts, and there is no doubt that you could go to YouTube right now and research any of these and come up with lots more in-depth information. I even have tons of videos with lots more information than are presented here in this course, but we are just introducing the basics so that you will have familiarity with them going forward. And as a last warning or reminder, none of these concepts are to just be traded by themselves. You always want to layer knowledge or potential market signals when performing your analysis or trade entries or exits. And we will definitely be discussing this further in the building your trading strategy unit. So don't despair. We're going to teach you how to layer and put these things together for a profitable trading algorithm. Here we are looking at 6 of the most widely recognized and referred to candle formations when traders are using conventional technical analysis. Now, each one of these candles can indicate a change in the direction of price action when they appear at certain points in a trend impulse or a retracement move. And each candle can be seen as formed as a bearish or bullish candle, and they are not limited in that capacity whatsoever. The engulfing candle typically suggests a continuation of trend. The hammer or the hanging man, it's got some other names, people refer to it as well, can suggest a reversal when it is found at the end of a trend. A Harami can also suggest a potential reversal. A shooting star can be a signal that a trend is about to change direction, and a spinning top and a doji candle both show signs of indecision and as well as a possible shift in momentum. So it's all cool and all to know these names, and I cover them because sometimes referring to a candle as a doji will mean that everyone will know which candle you're talking about. And seriously, these are only like 6 of the candle types there are, and there are some wild names and 100 different types of candles that people really trade by sometimes. But listen, and this is important, you need to use caution in learning the basics and adopting the basics into your trading toolbox. If you are entering into a career or developing a skill set that 90 to 93% of the people fail, and you are learning and incorporating things that the most of those 90 to 93% of the failing traders are trading with, what does that tell you? If they are all learning the same dirty dozen types of basics and trading those, and 90% of them still failing, you might want to stay away from those as part of your strategy. However, they are helpful to learn sometimes, if only to be able to communicate common concepts with people that you're talking about trading to, or to understand concepts that other traders are referring to. So let me show you what these candlesticks are really showing you and how you need to be relating to these in your mind. Just by looking at the structure of these candles that you will find in the market, you can get a really good idea of if you are seeing really strong selling pressure or strong buying pressure, or if a market is in a state of indecision without even having to know or think about what that candle is called. I am definitely not trying to talk down on any truly profitable trader who uses candle types as a confirmation. But let's look at the story of what that candle is showing us. Now, what a hammer really tells us is that prices were pushed down with very strong pressure only to see the buyers step in with power and then push the price back up. Now, a shooting star is the exact opposite of this. The candle opens here, and at the opening, price had momentum. And so it's going higher and higher, but intense selling pressure comes in and form the top of the candle, and then price push all the way back down, closing close to the opening price, which was right here. Now, to dive a little deeper, let's look at the story and really break down of what a doji might be telling you about the market. Here is a doji that formed on the Euro USD pair on the daily time frame. So this is a daily chart, and here's the doji that we're looking at right here. And it basically is just a small doji right there, right in the middle. And again, on a daily time frame, so each candle right here represents one day. So in the previous graphic, I shared that the standard definition of a doji was just that it was an indecision candle with a possible shift in momentum. And so this is the candle that I'm referring to right here. Remember, just the doji. You had price open and close at the same price point or very close to it at which it opened. And so now we are looking at that same doji, just one candle, okay, just one candle on a 4-hour time frame now. For a 4-hour time frame, there are 6 candles that make up a 24-hour daily candle. So we have 6 candles here that form this breakdown of a doji on the 4-hour candle. And what we see is that we have an open right here. This is where the doji opens right here. Okay. Price comes and pushes up, pushes all the way to the high right here, which is this high right here. Okay. And then price comes all the way down, pushes back down with a lot of momentum, does a retracement, comes down and forms the low right here, which is this low right here. Then price comes and closes right here. Then price pushes up and ends actually in another doji right here, which is at the same price at which it opened. And so you have the breakdown of 6 4-hour candles that really explain the story of what actually happened on this one daily doji. It didn't just just sit there and form this candle randomly. That candle forms and looks this way because something is happening. The doji opens at the same price at which it closes. And that's the indecision candle. But the truth is there was a lot of action that was happening during that time. And let's break it down even a little further. So this is the same doji on a 1-hour candle. Now there are 24 1-hour candles that make up this daily doji that you see right here. Okay. 24 candles on the 1 hour. And what we see is that we have the doji open here, which is the same opening here, which is the same opening here. Okay. We have the doji open and then price comes up, pulls back a little bit, comes up, forms the high. We have the Doji high here, which is the same exact high here and the same exact simple high right here. Price comes and pushes down, comes back for a small retracement and pushes further down to form the Doji low, which is the same low here and the same low here. And then you have price coming up, formed a Doji right there. Price pauses, pushes up, and then price ends up closing at the same price at which, or very close to the price at which it opens, which is the same closing price here and the same closing price that is here. Every candle tells a story. And when we look at these different candle types, what we're seeing is the story. And for me to express to you how to actually use candle types and to look at what you're saying, what I'm saying is maybe don't get lost in all of the wild names of dragonflies and crows and animals and people and all of that is cool. And you absolutely can refer to it if that's just something that you're really love. But I would encourage you to learn the story behind every candle, and that when you see this engulfing candle, on a daily chart, is remember what you're seeing is it could be that price just, started at the open and pushed straight up, but it also could very well be that price started at the open here and came up and down, came back, retested, came up, closed back, but it finally ended up closing right here at the close. But a lot of can happen in between. And so it's not just a solid candle. The same again with the hammer, the same with the shooting star, the spinning top, or a doji, is there is a story behind every candle. And so even if one of your confirmations to enter a trade or some other type of indication that your bias is correct, when you are into trade analysis, what I would implore you to do, and will tell you that this will set you well above other traders, is if right out of the gate, you're starting to tell the story of what the particular candle is doing and understand that, versus just going, oh, random doji, indecision, let's enter, is to go, oh, okay, so actually we had a high, then we had, either buying or selling pressure, just depending. And then, price closed at the same price point or very close to it at which it opened. So yes, it's indecision, but there's a lot that happens when you actually break that candle down.